Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's stay on the topic of global autos. Steve Mann joins us, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. Steve, what are you telling clients about the impact we may see tomorrow from President Trump and tariffs on the global auto business?
I've been telling clients that I think we're pretty much done for auto tariffs for now. I think the big thing that's going to come up next is really on how parts are going to be taxed going forward. And it's a big chunk. We had a report out there today. Tesla, even though they make a lot of cars here, but about a third of their parts actually are imported from elsewhere, mainly low-cost country like Mexico. And hence, surprisingly, Ford Motor Company does build a lot of cars here in the U.S., but they only have some 30% content that's actually based in the U.S. So lots to come on the auto parts section of the tariffs.
Yeah, so let's just understand that a little bit more. So you have the actual whole imported car versus the car part. And the whole imported car stuff should happen tomorrow or Thursday, whereas the car part is a May thing. Am I getting that relatively correct?
Yeah, that's right. So it could be really huge. For example, I was just talking about Ford, right? Anything that comes in from Mexico, for example, the Mach-E, which they're losing tons of money on already, comes from Mexico. And then, if on top of that, the parts are actually coming from Mexico or any other low-cost country, that could actually lift the price of the vehicle even higher.
So are the U.S. automakers, is this going to benefit them? And if so, how and to what degree? I'm unclear here.
Well, I mean, it's philosophical. There's, I think, debate on both sides. Automobiles are high value products. There's no argument against that. And, the design of the vehicle, the production of the vehicle, the manufacturing of the vehicles creates a lot of jobs in the U.S. In the manufacturing alone, if I'm, quoting some economists, every job that manufacturing creates, it creates another 0.4 jobs, peripheral jobs for that to support that manufacturing. So it does create a lot of jobs. It does create a lot of innovation. Example, we just had Rivian on. A lot of these pure plays like Rivian, Tesla, they make a lot of the high value components in-house and in the US already. And that has created a lot of innovation around cars and around how to make cars in a cheap way, less expensive way. I think there's debate, right? A lot of the legacy automakers have, outsourced that manufacturing to low-cost country. And maybe that's why they're facing a lot of the competition around the world where they can't really build cheap cars cheaply to the masses.
Is it possible that some of the winners are actually going to be other foreign companies? Like we were talking about, Paul just leased a hybrid that was built either in Ohio or what was it? Virginia?
Somewhere
south.
U.S. based.
U.S. based. So, but it's a Honda. You can make the same argument for Toyota. Like, are those cars actually going to be the bigger winners here?
It could be. Like Japanese, if you look at potentially increasing prices for consumer, from an automaker's perspective, I think the Japanese are in a better position because there's still a lot of demand for their vehicles. Their inventory is relatively low, around 30 days to 40 days of sales, versus the average industry is like 70 days up, and some automakers are over 100 days. So in terms of pricing, I think the consumers will be willing to pay a little bit extra. And so Honda and, examples of Honda and Toyota may be able to get the consumers to absorb some of the higher tariff costs.
Have we heard any U.S. auto manufacturer announce plans for new factories, or they're going to add jobs? What have we heard from the U.S. manufacturers?
Not yet. Not yet. I think there's a lot of discussion on, can we, with Trump about not taxing parts, certain parts, auto parts, but we haven't heard of reshoring. But, we've also had a lot of analysis. We've done a lot of analysis on reshoring. It's going to be a huge cash flow headwind for the automakers. If the automaker have to build a greenfield plant back in the U.S., that could cost upwards of $4 billion just for one plant. So that's humongous. So we haven't heard. I think the automakers are hoping that these tariffs don't last forever. But I'm sure in the boardrooms they're thinking about the contingencies around how to manage that capex, and probably asking the administration for financial support if they do have to bring back a lot of that manufacturing into the U.S.
All right, we really appreciate it, Steve. Thanks so much. Steve Mann, Bloomberg Intelligence Senior Autos Analyst.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
That Musk news is really interesting. It's great for the stock. Stock's up 4%, as John was just reporting. So I'm sure the investors there are happy. Let's go right down to D.C. and get it from our source down in D.C., Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. Nathan, in the Beltway, what was the feeling, what is the feeling about Elon Musk, his role, his proximity to the president is so close, and it's been that way since the inauguration here. But is anybody surprised that he may be leaving soon?
So I don't think I was surprised. I think this makes sense. And obviously, if you're a Tesla investor, you're going to like the idea that Elon Musk returns to the company. But if you think about it, the Doge committee, the Doge group, if you will, they've been expanding. Bloomberg News just reported a few minutes ago that Kalshi's chief regulatory officer is going to Doge. What Elon Musk essentially has done is he's created a group, and they're going agency by agency, but they can only cut so much. If they cut too much, then eventually it's going to be a political blowback. And Elon Musk doesn't have the power to go after the mandatory spending, which is where the big ticket items in terms of reducing the deficit is. So I think this makes sense. He's going to return to the Tesla, assuming Politico's reporting is correct. He'll return to Tesla, but nothing prevents him from coming back. Nothing prevents him from going into the White House. And I think if you're a Republican on Capitol Hill, you'll love the idea that maybe you're not going to have the White House calling for deep cuts to Social Security, the mandatory spending, if you will. They'll be left to Congress. So I think they may be pleased with this as well.
So this is not the end of Doge. If this is indeed true, this is just sort of an evolution of Doge. So we can still expect that to come and bring hammers to everyone's payroll here?
Absolutely. Well, at least in terms of your first question, in terms of this is not the end of Doge. Doge is going to continue. But what Elon Musk did is essentially created a group of advisors and individuals that are going in agency by agency, and they're looking at identifying areas to cut. But for, Elon's main goal of deficit reduction, he's not going to be able to do that with Doge. They just do not have the power to do that. It requires an act of Congress. So you are going to see Doge continue probably for the next year, if not a little bit longer, until they really get to the point where they are streamlined and they feel that they've adequately right-sized those agencies. But for the big ticket items, we're going to see that in the upcoming tax debate in terms of things like Medicaid, SNAP benefits. Obviously that wasn't mandatory, but Social Security, the really key things that are really important to the deficit, Doge and Elon Musk just don't have the ability to control. He's going to need Congress to do that, and I think Congress is going to be happy. They're now going to be back in the driver's seat, assuming that Elon Musk does leave.
And Nathan, I wonder if the last night's race in Wisconsin with the judicial race where Elon Musk candidate did not win, do you think that had anything to do with his decision making?
I don't think so, but I think what last night did, it was an indication of what Republicans fear may happen 18 months from now. I mean, if you look at midterm elections, they always swing back the other way. I mean, the joke is, think of U.S. politics as like a car out of control going down the street. It hits guardrails left and right, left and right. It never goes straight. And so, the tendency here is that the House of Representatives is going to be in play for Democrats. And I think yesterday just told a lot of those Republicans on Capitol Hill that a year from now, this may be something that hurts them politically. dramatically. And so I don't think anybody's going to vote off of what happens right now 18 months from now. But I do think that this, decision for Elon Musk to maybe step away from Washington and go back to Texas and Florida and so forth like that will make a little bit of the Republicans on Capitol Hill breathe a little bit easier, just because they can get a little bit more control of the narrative.
You know what this did do? We didn't talk about tariffs for 4 minutes.
Yes.
I'm just saying that news flow definitely just changed. Nathan, okay, so 4 o'clock today. I'm going to be sitting on set, on TV, going to have my terminal, NI heads for all the pros out there. What are the headlines that the literal headline that crosses, that you're going to be most interested in?
So obviously the biggest question is this going to be a country tax or a tariff, or is this going to be a tiered tariff? But, one of the big questions we're getting from clients this morning is they're focusing on what Treasury Secretary Scott Bessent is saying in terms these are a cap. He's essentially floating the idea that these are a cap, with the idea here that potentially President Trump will be willing to negotiate going forward and bringing this down from like a cap down to a reciprocal tariff. And so the question for me is, in this statement tonight at the White House, at the Rose Garden, is President Trump going to give any indication that he'll be willing to pick up a phone tomorrow? Because if that's the case, he can come out and say 20, 15%, 20% universal tariff, whatever it may be. But tomorrow it may be different. And so you're not going to get that clarity of this is what the tariff policy for the United States will be. I don't think the markets will like that, just because I don't think that clarity is coming.
So do you expect any pushback, feedback once we do know what the policy is from either, obviously, the Democrats or maybe even some in the Republican Party?
Well, absolutely. I mean, I think we're going to see, obviously the Senate sometime today pick up their resolution to try and, overturn these tariffs that were up with Canada. And, my vote count, I had, the Democrats need 4 Republican senators to go along with them. And I think they have it. So you are going to begin to see a public rebuke of some of these tariffs. I would just caution, though, and say that, tariffs are the power of the presidency. Congress delegated its authority a long time ago. So there's only so much Congress can do to actually advise the president, say, maybe you should scale this back. So it's ultimately President Trump's decision. And I think that for him to be able to walk back this tariff, and this is just my own personal belief, you're going to need to see consumer confidence or sticker shock amongst things that, Americans just buy on a daily basis for him to actually walk back a lot of that tariff threat.
And of course, though, the goal is to shift the economy, though, away from fiscal spending to private-led investments. Is that a possible thing?
Not in the short term. I mean, this has been the White House plan all along, is that you're going to have short-term pain for long-term gain. But, some of these pains are going to be very, very, very permanent. I mean, if you think of just the farmer argument in particular, that, if the United States does move forward and use the USDA to implement subsidies for farmers aren't going to like that, because essentially what it means is that you're going to be thrown out of the supply chain. And in the future, maybe instead of buying goods from the United States, they're going to buy it from Brazil. That's not something you're going to be able to easily reverse. So, yes, you are going to get this shift. And we've heard from clients saying, look, I want to potentially buy a factory in the United States. I just can't do it in 2025. Probably can't even do it by 2027. So, again, it's really how long can the White House really keep with this strategy to try and transform that economy?
All right, Nathan, thank you so much. We appreciate it. And you're going to have a long afternoon and into the evening analyzing what we will hear from the president this afternoon. Nathan Dean, senior policy analyst, Bloomberg Intelligence. He's based down there in Washington, D.C. He does a wonderful job of explaining all the mechanizations of what happens down there in Washington, in Congress and Capitol Hill, and in the White House as well.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
In D.C., it's not just about Musk, it's not just about tariffs, it's also about TikTok. Potentially, President Trump is weighing plans for TikTok's sale today at a meeting. We want to get more on this with Matthew Schettenhelm, media litigation analyst for Bloomberg Intelligence. He joins us now from D.C. All right, remind us of where we are in the law and what Congress did and where we're at here.
Yeah, so we are at the point where Congress adopted this law last year that effectively bans TikTok in the United States as of January 19th. The Supreme Court upheld that law after TikTok brought a constitutional challenge. And then President Trump adopted an executive order just before the law was going to take effect in mid-January to say that, look, companies that are at risk under this law, don't worry about it right now. We're not going to enforce that law. So app stores like Google and Apple and Oracle, companies that host TikTok, potentially faced, billions of dollars of liability under the law. Trump's attorney general sent a letter saying, don't worry about it. We don't think you're in violation of the law, so you can continue to host TikTok. That executive order from President Trump ran for 75 days. That takes you to Saturday, April 5th. So we're at the point where there's likely to be some action. And that, as you said, there's a meeting in the White House today.
It's a good time for this discussion, Matthew. A red headline crossing the Bloomberg terminal as we speak. Amazon puts in a last-minute bid to acquire all of TikTok. What do you make of that?
That's fascinating. I mean, to me, that underscores how far we are away from a resolution here. And you're talking about, some indication that that a deal could be in place by Saturday. I don't think so. There are so many moving pieces here. And new bids coming in, that the idea that all of this is going to be resolved in 3 days seems pretty fantastic. So I think what you're likely to see is sort of some indication of movement towards a deal, and President Trump again kicking the can down the road. And the only question is anyone going to stand up to that? There was a lot of political courage to advocate for a ban of TikTok last year. There were some votes in Congress that were 50-0 for it. But now President Trump has a warm spot in his heart for TikTok, as he says, and suddenly some of that courage is falling away. So that's going to be the interesting dynamic, is how much lawmakers or maybe TikTok's competitors stand up and say, hey, we have a law on the books here that bans TikTok. Are we going to enforce it or not?
So to that point, I guess I wonder what part of TikTok is still left to be bought. In that, is it just going to be the U.S. stuff, which may not be as valuable, or is it going to also be the technology that kind of sits in China? And if that's the case, how do we get that?
That's sort of the million-dollar question here, because there was a lot of pushback in Congress for the idea that a company tied to China would still have control over the algorithm, and a lot of the solutions you're seeing floated around look a lot like what TikTok was pitching as Project Texas last year, where the U.S. operations would work here, maybe under Oracle or someone else, but the algorithm would still ultimately be controlled by ByteDance. And the question is that the sort of solution that we're talking about here? Because ultimately China and ByteDance need to agree to this. And with Trump kicking the can down the road on this ban, I'm not sure they have a lot of concern. I don't know that the U.S. has a lot of leverage to force them to sell the algorithm. So it seems very likely that we're looking at some sort of solution that keeps that algorithm tied to China, tied to ByteDance. And the question is Congress going to be okay with that now in a way they weren't last year?
I mean, silly question, but there's no indication that ByteDance wants to sell here. So, I mean, an Amazon bid is impressive, but I don't think I've got a seller there, do I?
That's been the problem, through this whole process is ByteDance really willing to sell, and especially the algorithm component here with China needing to bless that. So yeah, a lot of offers, a lot of talk, but I think we're far from any sort of final resolution here.
So to that point, this goes back to the earlier headline that Paul just broke, that Amazon's putting in that last-minute bid to acquire all of TikTok. This is according to the New York Times. Who else quickly is on the docket to potentially buy?
Yeah, so I mean, you keep seeing Oracle mentioned as a potential bidder. You saw Frank McCourt was on Bloomberg Television earlier, and a number of other names floating around. I don't have great visibility into all those offers. I've heard 4 offers talked about, but I think we'll learn more this afternoon after this meeting as President Trump considers next steps here. But again, a lot of open questions on the law and big questions politically of whether people are going to advocate for the law that was adopted last year.
All right. So, Alix, that Matt does all the litigation around the media communications, which means he's going to be going out to the NAB conference out in Vegas, National Association of Broadcasters. So I asked him offline, where are you staying in Vegas? Because that tells me a lot about a person, His response, he didn't know.
Yeah, Paul did not like this, by the way.
Matt,
I booked someplace. I got to look it up, Paul.
Oh, my goodness. Because, when I was out there, first it was the Mirage, then Bellagio, now it's the Wynn. But it says a lot about it.
But if you don't know where you're staying, that just means that you got nothing going, Matthew. Lots of shade. Matthew Schettenhelm of Bloomberg Intelligence litigation analyst. Thank you so very much.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.